A new reality. The European Central Bank cut interest rates to kickstart that region's economy. The Federal Reserve may be on the verge of tightening rates for the first time in nearly a decade. And there's the possibility that yesterday's mass shooting in San Bernardino was an act of terror. All three events, a changing of the macroeconomy and the fight against terrorism, will play out over the long term. All three weighed on investors' minds today. By the close, the Dow Jones Industrial Average slid 252 points to 17,477. The Nasdaq fell 85. The S&P 500 dropped 29. Steve Leisman takes a closer look at the events that kept investors on edge.
Concerns grip markets today from two completely different sources. In Frankfurt, Germany, the European Central Bank announced a sweeping new round of easier monetary policies that nevertheless fell far short of market expectations. It strengthened the dollar, sent bond yields surging, and weighed on stocks around the globe. And then in the early afternoon, new details emerged about the horrific shootings in San Bernardino. Increasingly, the event looks less domestic and more potentially international, with NBC reporting one of the suspects had been radicalized. Fed Chair Janet Yellen was asked about the potential economic effects of terrorism in her testimony before the Joint Economic Committee today.
Those risks are ones that we watch very carefully, and I would agree with you that it does have the potential to have a significant economic effect. I would not say that I see a significant effect at this point.
Yellen gave every impression that despite risks and concerns that might be out there, including a stronger dollar and weak overseas growth, the committee looks ready to hike. Her comments follow an ECB press conference where President Mario Draghi laid out new measures to ease and stimulate the European economies. They included extending by 6 months the minimum amount of time the ECB would buy bonds and broadening the kinds of bonds it would buy. They also cut interest rates another 10 basis points down to -30. But it wasn't enough. Markets wanted more, they expected more, and the euro surged against the dollar. Stocks fell. Then Draghi faced a barrage of questions from reporters, had to defend his moves, saying they were adequate to the task.
We are confident that these decisions actually are adequate to achieve our objectives. I don't think our communication was wrong. I think these measures need time to be fully appreciated, and we will see.
Draghi speaks in New York tomorrow, and markets around the world will follow his every word, as they will the increasingly awful news from San Bernardino. And they will weigh those events against a November jobs report that should show employment in the United States is relatively healthy, likely prompting a Fed rate hike. For Nightly Business Report, I'm Steve Leisman.